Well, you just got pre-approved. Yay, congratulations. And the number is bigger than what you expected, so you're excited, of course, and maybe a little shocked, and you take a screenshot and send it to your partner. Well, here's what nobody tells you at that moment. That number, that pre-approval, it's not your budget. And confusing these two things is how people become homeowners on paper and broke in real life. Quick disclaimer though, nothing here is financial or legal advice. Talk to your lender and real estate professional who knows your specific situation. I'm here to give you honest framework. If you're in the Seattle area, happy to help you. Let's go. Here's something most people don't realize about the pre-approval process. When your lender calculates how much you qualify for, they're actually pretty thorough on the housing side. So they calculate the mortgage payment, the property taxes, the homeowner's insurance, the HOA fees, mortgage insurance if you're putting less than 20% down, and all of that goes into their calculation. So that part they've done the math for. But what they haven't accounted for is the rest of your life. The daycare that costs you $2,000 per month, per kid. The private school you want your children to go to someday. The business you're building on the side that needs capital. So you got to save money for that as well. The safety net you want to have on the side as dry powder in case you lose your job or switch careers or whatever that may be. The car that's probably going to break down at some point. So the point is, the bank qualifies you for a housing payment. It doesn't qualify you for your entire life. And that's the trap. So here's the question I ask every buyer before we look into a single listing. After your housing payment, all of it, taxes, insurance, and everything, after your cars, your childcare, your savings, your safety net, your real monthly life, what's left? Answer that number first and then dedicate a housing budget. And after that housing budget, is there a breathing room? Because if there isn't, it doesn't matter what the approval letter says. That house is too expensive for your life. Not on paper, in reality. The smartest buyers right now aren't the ones who are maxing out their approval. They're the ones who buy something that they can actually carry and still have a life outside of it and still be able to, live inside of it. You don't want to buy a house that is so maxed out that you have to spend most of your time every single day out there working the extra shift, Ubering your way out of every single month just to keep that house. I mean, you're not living in that house at this point. You're living outside the house most of the time just to pay for the house that you were so excited to buy. Now, some of us might be having the opposite issue. Their loan approval number is not even close to what they can buy in their market. And if the answer to that is that there are genuinely no properties at all within your budget for sale, then the focus right now should not be about buying a house. Your focus right now should be on growing your production engine, which we talk about in a separate video. But if the answer is that there are none that fit your criteria, then that takes us to the next brutal truth. Think about your phone for a second. You could subscribe to every app, right? Every service, every feature available, but most people don't do that because you only pay for what you actually use. Buying a home kind of works the same way. You should be buying for the features that you need in your life right now, not subscribing to all the features, even when you don't need them right now. And this is where the first-time home buyers get emotional, which is completely understandable, but it costs them. And here's what it looks like in real life. You and your partner are buying your first home. No kids yet, but you're thinking, and we want them to be in a great school district, so you start shopping in the top-rated school district in King County, and those homes are usually $150,000 to $250,000 more expensive than the next neighborhood over, which, by the way, still has perfectly good schools. Well, you just subscribed to the Premium School District app. Congratulations. For kids you don't even have yet, and you're paying for it at every single month starting now. Here's another one for you. You work from home 2 days a week. You're imagining that someday you're going to go fully remote, so you want a dedicated home office and the big yard to breathe and, the whole setup. So you stretch the budget to get it. And 6 months later, your company changes the whole policy and you're back in the office 4 days a week. Well, now you're in a house that's 30 minutes farther away from work than you need it to be. Well, congratulations. Not only you now are paying for the space you're not using, but now you're paying for it with your time in the beautiful Seattle traffic. That subscription shouldn't have been done unless you actually need it. So subscribe for it when you need it. This is the framework I give to every first home buyer. Buy your home for the next 5 to 10 years. Not your 15 years, 5 to 10 years. That's the magical number here. And what does your life actually look like during that time? How many people are going to be living in this home? And where do you actually think you're going to need to be for your source of income? So like, buy enough home for that season and not every possible season you might someday live through. Because the statistics show that 47% of homeowners live in their houses for, 6 to 10 or 11 years. So the first home is not forever, at least according to the statistics for many people. So this home is a step that fits your life right now, bought at a payment that you can breathe with, will do more for you in the future than a perfect home bought at a payment that suffocates you. What are the apps you actually need right now? Subscribe to those, not the ones that you want someday. Wait until you actually need them. Brutal truth number 3. I know that's not what you expected to hear from a real estate broker, but I would rather be honest with you and not just tell you what sounds good. Here's the truth. Your primary home is not an investment, not in a traditional sense. A real investment generates cash or grows faster than inflation over time. And the types of those investments would be things like stocks, businesses, rental properties. Those are investments. But your home, owner occupancy, that doesn't pay you every month. It actually costs you every single month. Now, I'm not saying home ownership isn't valuable. It absolutely is, but for a completely different reason. Your home is one of the best hedges against inflation that you can possibly own. Think about it this way. Rent goes up every year. Your mortgage payment is fixed. So every year that passes, the real cost of housing goes down relative to everything else around you. That's powerful. And here's the other thing that it does. It forces you to save every month. Part of your mortgage payment goes towards principal, towards equity, towards that ownership. So you're not choosing to save that money. The mortgage does that for you, and inflation becomes that dividend on the value of the home. So for many people that struggle to save consistently, that type of forced saving mechanism is genuinely life-changing. But here's where buyers get in trouble. They buy a home expecting that it's going to make them rich. They watch the market go up by 30% in like 3 years and think this is how wealth is built. And sometimes it is, but that's not the norm. Historically, values appreciate about roughly 3 to 4% a year on average. So that's barely keeping up pace with inflation. Now, compare that to the stock market's historical average of 7 to 10% annually. The pandemic boom was just an anomaly, not a blueprint. So don't build everything on that. So when you're buying your first home, buy it because you need a stable place to live. Buy it because you want the forced savings and the inflation hedge. But don't buy it because you're expecting it to fund your retirement. That's what a financial plan is for. Your home is a foundation, not a financial strategy. And here's what I want you to walk away with. Buying your first home can genuinely be one of the best decisions you can ever make, but it requires honesty. Honest about the bank's number, what that actually means for your real life. Honest about what home ownership actually does and doesn't do for your wealth. Honest about what you actually need right now versus what you're imagining for some other season in your life. Because the goal is not to just become a homeowner. The goal is to become a homeowner and to actually enjoy it and to not be spending your life working the extra shifts to make ends meet because of the cost of that home. A home should move you forward without quietly destroying everything else you're building. That's the version of homeownership worth chasing. If you're a first-time home buyer in the Seattle area and want to discuss your purchase planning, feel free to reach out to me. And if this helped you in any way, please give it a like and share it with someone about to make their first move. Thank you so much for listening. I'll see you next time.